Perhaps before I begin talking about this specific issue, is to just share with you some of the things I do in the entrepreneurial space. I don't know how many of you have heard of Endeavor. Endeavor Global is an institution which supports entrepreneurs globally. I sit on the board of Endeavor in Kenya, and so I'm going to be using some of the examples of some of the things we've done with institutions which exist in Kenya, which we've been able to support and enable them to scale up and become fairly large institutions so far. I also do some work with Total. If you've heard of the Total Startup Program, which again is around innovation and trying to find people who have interesting ideas which can be taken to market and basically helped to penetrate the market. The difference is that the Startup Program is looking at young people who are starting off in life, whereas Endeavor is looking for companies, whether startup or run over many years, which are at what we call a tipping point and looking to scale up to basically go to the next level. So I'll give you a few examples of those types of companies which we have supported in Kenya and have grown into fairly large institutions. So, if I was an investor, what was it I'd be looking for potential for people like yourselves? I think the first and perhaps most important thing is to look for people who have something to lose in what they're doing. I think you've heard of something called skin in the game. Okay? What is it you have to lose? Because if you have nothing to lose, then it's not easy sometimes for investors to come and talk to you, because what they recognize is that there's a bit of tenacity. You have a good understanding of what you are doing, and you are prepared to put a lot, in most cases everything, into it. And it means to them that you will do everything you can to be able to deliver on what you've set out to do. So execution, within that, they will assess your execution ability. And we'll also look at what kind of teams you put together. Investors do not like one-man or one-woman bands. They want people who are also looking to build a team around them, which can then drive the compelling idea they basically have. And over and above that, it is also looking at your understanding of how the solution or what it is you're doing fits up with the customer profile you've basically established or identified as offering you the opportunity. The second thing, and there are about 6 things I'm going to talk about, then I will stop talking and listen to you and respond to your questions, is looking for a compelling idea. Is it new? Is it something which has been tried many times and hasn't worked? Or is it something which is new either from an idea perspective or a product perspective and has not been tried and tested before? Some of the examples, and this is not the best example, but it is one which I got involved very, very earlier on in my life. Not from an investment point of view, but from a product management and implementation perspective, is M-Pesa. And my involvement in M-Pesa at the time was basically from a banking perspective, but looking at an interesting solution, because I think that when you ask many people what M-Pesa is all about, they don't appreciate the full story of actually where it started from, just close to 12 years ago. At the time, M-Pesa was trying to solve for what we call time and distance in the honoring of financial commitment. What do I mean? If you recall, and if you don't recall, then I can probably just share with you. Microfinance institutions had developed over time. And one of the principal problems they had was one of inability for people who borrow from them to actually pay them. When the problem was analyzed, it was found that for a lot of the people who borrowed from microfinance and for the amounts of money they borrowed, the time it took them to be able to go and repay their loan and the cost it took them was actually sometimes much higher than the installments they were paying. And of course, the consequence of that was that they basically then did not honor their obligations. And when we got involved with M-Pesa right at the beginning, 12 years ago, and we got into a meeting with Michael Joseph at the time, DFID, which was seeking to fund M-Pesa, and 7 chief executives from commercial banks. They presented the proposition to us and what they were thinking about and all that. And it was intended to be a whole day meeting of sharing ideas and all that. And at noon, everybody had left. And we were left in the room with, I was left in the room with Michael Joseph and the representative of DFID. And so we were wondering what had gone wrong in the conversation. And so we continued with our conversations in terms of all these ideas which were being put forward. And at that time when Michael asked me why I had stayed behind, I told him, look, I think you are trying to solve for a very fundamental problem, an interesting problem, one of saving people time and also dealing with their distance problems in terms of ability to transmit money. And so we set out to basically develop the product to be able to achieve that. The reality is that it didn't immediately solve the problem it was intended to solve for the reason that when we did the tests, the volumes were not large enough for the amount of investment which was being put in by DFID, which was about £4.5 million at the time. But the reality is that if you invest the problem, and this is a conversation we had after a couple of months of tests, we asked ourselves, if you can pull money in, isn't it possible to actually push money out? And the rest, as they say, is history. And that is how M-Pesa was born. So it was really solving real problems. Now, it happens to have been done by a fairly large institution, but whatever it did is no different from the problems you are solving on mobility and all the other problems which any of you would be seeking to solve. So I'm really bringing that out to just emphasize the need of ensuring that investors look for people who are solving real problems. And so that's a very, very critical consideration. But in solving the problem, it is also important that there is an element of commercial traction which is generated. Because if you are solving problems and you do not derive commercial value out of it, then it is very, very unlikely that anybody will come in and decide to put money in what you're doing. So that's the second part of this, that solve problems or have a compelling solution which solves problems, but ensure that it has commercial viability. Which then leads me to the issue of commercial viability itself as a specific item, not in terms of the principle, but some of the things you then have to look at, because stating that you have commercial viability is one thing, proving that it exists is really the next thing, which investors would like to look at. And the first one is to ensuring that they understand the underlying assumptions under which you are working. Because one of the things I tend to hear a lot when people tell me, oh, this product of mine, I can sell it to many people. Now, if you are asked to describe what many people means, 10 people are many people. 1 million people are many people. And so, what do you mean by what you say? And that is really demonstrated within the assumptions you put together. So it's very, very important that you are clear as to what exactly your business model is and the assumptions which underlie it. If you have the right assumptions, obviously, then the next thing you would ordinarily do is develop a financial model. The aim of the financial model is to help you prove your hypothesis that if I do 1, 2, 3, and 4, I will deliver a certain outcome. And so as an investor, I would be interested in knowing, first of all, is the hypothesis right? Secondly, is it able to deliver the results which are expected? And can those assumptions be tested? And this will come in the form of course, you define an income statement, balance sheet, the various cash flows which you put together. And then think about a useful lesson which I have found over many years, both as somebody who's tried to invest, failed a couple of times, and eventually did some things which worked and succeeded. And one of the key ones when you think about it is what I call the illusion of investment, because 90% of the people I talk to about investment make some very, very aggressive assumptions around their revenue generating opportunity, and tend to understate their cost of doing business. And a lesson I learned many, many years ago, and which I've always used when I'm talking to potential investors, is you must be skeptical. And as an investor, I'm very skeptical. If somebody gives me a revenue projection, I tell him, look, revenue is an illusion because you have to prove it is going to exist. The cost of doing what you want to do is a fact. So you have an illusion in one hand and a fact in one hand. How do you make sure that they are actually brought together well to enable you actually deliver what you want to achieve? And I have two lessons of this insofar as my own investment experience is concerned. About 30 years ago, I tried, having lived in the UK for a couple of years, I thought I would import some very, very interesting idea around developing a chain of pharmacies. And I got up to my third or fourth pharmacy. And after that, after about 4 years, the business failed spectacularly. Why did it fail? It failed because of the regulatory regime at the time, which did not recognize technically the running of a chain of pharmacies, because the licensing of pharmacies, one, depended on you having a pharmacist to begin with. So the law required that to run a successful pharmacy, you had to have a pharmacy employed. And so in running 4 pharmacies, which were part of my original chain, you end up with having to employ 4 pharmacists, perhaps plus somebody at the head office who was then the chief executive of the business. But at the time, Nairobi University, I think, was producing about 30 or 40 pharmacies every year. And the reality was that I could never get enough pharmacies. So it was like a revolving door. And if you are also relying on prescription medicine, you have to be able to have a proper supply chain in terms of suppliers. So as I've said, after 5 years, I lost probably about 10 million shillings and retreated and stayed in banking and spent quite a few years continuing with my banking career, because I realized that business wasn't that easy. A couple of years later, I and a couple of my friends then also decided, everybody talks about food and the food industry. And so we tried our hand at what I hope most of you recognize now as Java. And that was perhaps the most, it's basic. But when we were setting up the business, one of the things we told ourselves was, one, we wanted to make it a facility and a restaurant which attracts families. That was one. Two, we committed that we would never sell alcohol in any of our units. And thirdly, we committed that a family of 4 would be able to come to any Java and never spend more than 2,000 shillings. And a lot of my friends at the time told us, look, if you're running something like a restaurant and you don't sell alcohol, it will fail. 15 years later, we were able actually 10 years later, we were able to sell it for quite a tidy sum of money. At the time, about $55 million. The people who took it from us and who we remained with then sold it 5 years later for $110 million. And what is the message I'm trying to give you? Is that it has to be an idea suitable for the time. You must get the evaluation of your opportunity very, very clearly, because if you get it right, then it works. If you don't get those fundamentals right, then you continue chasing an illusion, which is the revenue, and the assumptions you make need to be very, very realistic. And so it's very, very important that you do that. The third consideration is obviously about you as an entrepreneur or somebody with an interesting idea. Is not only do you have to have the ability to execute, you have to have an ability to put a team together which can help you execute. Because everything about business is around how you execute. You can have the best idea, you can have the best assumptions, but if you don't execute effectively, then it doesn't work. And the reality is that that's really where a lot of the issues actually ultimately are. Whether you are running your own business or running any other business, it is execution actually which defines the ones who win and the ones who do not win. The fourth consideration would be around if I was an investor and you coming to talk to me about the opportunity, sometimes chemistry is important. And chemistry can either be instantaneous or it can be cultivated. So that you cultivate my interest, I also cultivate the opportunity which you have. And so the level of engagement we are able to have together is critical, because I see people who have opportunities for people to come and invest, and they want to keep some information, because they say, well, it's so secret, so confidential, I cannot share it with you. Because obviously the assumption, and it has happened before, people have taken ideas and run with them and made a lot of money with it. And the best example of ideas being taken and being used successfully is the idea of digital cameras. If you take that as an example, and you take an organization like Camera, if you go back into history, there were two major companies which were involved in cameras and films and all that. Kodak. Do any of you remember Kodak? Remember Kodak? Kodak stuck on films and developed their entire business on film. They had very bright scientists who developed digital opportunities. The clever thing is they patented them, but say that who was ever going to use digital? And somebody clever took the idea, took it to Japan, where it all started, and killed Kodak's business completely. And so it's understandable when you say that I want to keep it very, very close to my chest. But sometimes if you keep it too close to your chest and you don't cultivate your investors, then they do not see the value on what you have. So obviously the reason why I believe the lawyers are here in the room is to make sure that they can protect you from a confidentiality perspective. If those confidences are broken, then what are the penalties which apply and things like that. So that from a business perspective, you are basically able to cultivate your potential investors. And three examples I have, again, out of some of the recent experience with Endeavor in terms of being able to support local businesses, which spend enough time to cultivate investors, ensure that the investors understand what they are doing, and then use that to extract real value from a financial investment point of view on those businesses. I don't know how many of you have heard of Twiga Foods. You've heard of Twiga Foods? How many people do you think they employ today? Take a guess. Huh? No? Okay, let me tell you, it's just in excess. They've just crossed 3,500 employees. Started off, when was the first time you heard about Twiga Foods? Must have been when they raised money. And it was in the newspapers, when they raised $50 million from investors in New York. Because as Endeavor, we helped them in their journey to raising the $50 million from international investors. And what problem were they trying to solve? Does anybody know what problem they're trying to solve?
Distribution, supply chain.
Yeah. The food supply chain. Because 30% of all the food produced in Kenya rots at the gate or at the road before it gets anywhere. And what typically happens, if you've driven anywhere in Kenya, we seem to have a knack. When we are growing cabbages, we grow a lot of cabbages. When we are growing pineapples, we grow a lot of them. And the supply chain is impacted by scrupulous middlemen who basically wait for you until about 5:30, and they knew you have no choice. Well, how many cabbages can you eat in what night? So the reality is that most people who do those things would leave their product on the road because it's cheaper to leave it there than carry it somewhere else. And what Twiga was trying to solve for was a supply chain of getting product from farm to the market. And in a short just over 5 years, have been able to raise just about $50 million to help them grow the business. Peter Njonjo, who I sit with on the board of Endeavor, has just left a fancy job in Coca-Cola, where I was running the Africa operations, to now concentrate full-time in helping manage Twiga Foods, which he was involved in founding. And so I'm using that story to just demonstrate that being open, talking to your investors, getting them to understand, cultivating them, is a very, very important thing. How many of you have heard of a company known as Cellulant? How many? Oh, okay, good. Do you know how many countries they are in? Yes.
There are many alumni.
Okay. Oh, there are many. Okay, so you know Dr. Kirudu. Okay. But think about the reality of it now. When they recently, how many of you have heard of TPG Satya? TPG Satya is one of the largest private equity funds in the world, which recently took a fairly large stake in Cellulant. Why did they make that investment? Principal reason is that looking at the population of Africa and looking at the platform which Cellulant has developed, they saw the opportunity of that platform being used repeatedly in different countries. And Cellulant cultivated this relationship over a 3-year period where they were sparring with each other for close to 3 years before the large investment eventually came on board. Okay, trick question. How many of you have heard of Africa's talking? 1, 2. Okay. I'm happy to take any questions you might have.